When I started my business many days ago, there was no Teams, there was no e-Teams. In actual fact, those days, if you had to make any tax reporting, for example, file your tax returns or make any payment, everything was manual. Things were difficult. For you to do that, you needed to set aside a day. And that was the day you would take the trip. And that trip headed somewhere. The tax commissioner's office or any other place that had been allocated for you to file the tax returns or go and make the payments. Things were difficult. Here we are. Today we have TIMS and we have e-TIMS. Times change. In this session, we are going to discuss about TIMS and e-TIMS and how they are likely to affect your business and also your tax bill. It is true that everything that the government introduces is going to affect the taxpayers either in a negative way or in a positive way, and this highly depends on the particular taxpayer. When the government introduced the e-invoicing solutions through TIMS and e-TIMS, it is no exception. It is not. There is a misconception, largely driven by the social media, that there are some taxpayers, especially those who are not registered for value added tax, that they are exempted. It is important for you to note that unless you are specifically exempted from complying with the requirements of TIMS and e-TIMS, you must comply. As long as you are a taxpayer and the supplies that you provide are not in the list of those that are exempted from TIMS and e-TIMS, it is a must that you comply. Some of the people who are exempted are, for example, those who are engaged in employment services. The question is, how will the e-invoicing affect your tax bill? But before we look at that, let us ask ourselves, how are you expected to comply? There are very many things that you need to do, but let us point out two things that you need to do. Number one is to onboard, and that is to get TIMS, or you download the eTIMS app from the tax commissioner's website. Number two is that all sales that you're going to make, you're expected to make them through TIMS or eTIMS. So those are the two very crucial or important things that you need to do. Let us look at the likely effects of you using TIMS and e-TIMS. As indicated earlier, the likely effects will depend on the taxpayer and the actions that they will take or fail to take. We are going to look at 5 likely effects that may take place, and please note, this does not mean that these are the only things or the likely effects. There are very many others out there, and some of the effects will become apparent as we progress. Number one is decrease in the cost of compliance. Your sales and purchase data will have been transmitted to the tax commissioner at the end of every tax period. And when you're going to be filing your tax returns, you will only need to confirm the data that is already there. This you can do anytime from the end of the tax period, for example, a month or year of income. And this you can do 24/7. This means that the cost of compliance is going to be drastically reduced. Number two is loss of business. For those people whose business is offering services being taken over by the IT systems, for example, those offering tax return filings, they may lose their business. However, they need not worry because there are still services that will be required. What they can do is to talk to those people who they have been filing their tax returns for and find out what else they can do for them. Number three is loss of jobs, and this is especially those Kenyans who have been employed in businesses that have been offering services that are being taken over by TIMS and e-TIMS. What is likely to happen is that there is going to be reduced work, but they only need to look around and find out what else can they do. Number four is decrease in the tax bill. All sales must be reported, and that has always been there. However, we find that previously some of the taxpayers were not reporting all their sales, and they were also not reporting their purchases. In this particular case, whether you're going to report your purchases or not, your supplier will have reported the sales. And this means once your supplier reports the sales, that is going to be credited to your tax ledger with the tax commissioner. And this means that all your purchases are going to be reported, and that is going to increase your VAT input and also your expenditure. It is important to note that we are talking about the reported expenditure or input. The incurred expenditure may be different from what is reported, because unless the seller reported the sale in iTax, you do not have any expenditure on iTax, and that is going to affect your tax bill. But if the seller or sellers reported the sales, ultimately you're going to pay less VAT and also less income tax. Therefore, TIMS and e-TIMS is going to contribute to the decrease of your tax bill. Number 5, increase in tax bill. All sales are expected to be reported to the tax commissioner through TIMS and e-TIMS. There are very many taxpayers out there who, for whatever reason, they do not report all their sales. So for those people who have not been reporting their sales, they are going to find themselves in a situation where the tax commissioner has all their sales details, and the tax is going to be based on the sales. What is likely to happen is that because all their sales are going to be reported, then they are going to pay more tax. Additionally, if you do not purchase from people who are already on TIMS or e-TIMS, it means that those purchases are not going to be reported to the tax commissioner. And the tax commissioner has made it very clear that only those purchases that are already on TIMS and e-TIMS are going to be recognized as expenditure for your tax payments. The likely scenario is that if you purchase from people who have not onboarded, that is, people who are not using TIMS or e-TIMS, it means that you will not have purchases, you will not have expenditure, you are not going to have expenses, and your tax bill is going to be very high. For example, just imagine you're in the construction industry and your purchases, especially sand, stone, rubber, are not captured as purchases on e-TIMS or TIMS. What is likely to happen? If your purchases or expenditure is not going to be captured on TIMS or e-TIMS, it means that you cannot claim that expenditure and your tax bill is going to be very high. It is therefore important that every taxpayer ensures that their suppliers are on TIMS or e-TIMS, irrespective of whether they are registered for VAT or not. If you don't do that, you're going to purchase from them, those purchases are not going to be around, and you are going to end up paying tax. For example, if you have purchases of 100 million, and maybe out of that 100 million, 60 or 70 million supplies are from people who are not on TIMS or e-TIMS, you are not going to be around that 60 or 70 million expenditure. You're only going to be around 30 million. You can imagine the tax on that 60 million or 70 million expenditure. That is around 18 million or 21 million, and you're going to pay that tax. What are we saying? This is what we are saying. The problem is not going to be the decrease in your tax bill, but the problem is going to be in the likely increase of your tax bill. What do you need to do? You need to look at who your suppliers are. If they are not on TIMS or e-TIMS, then you may need to either encourage them to onboard, or you may have to look for other suppliers. Remember, even if they are your relatives or you have been in business with them for a long time, when it comes to money, you must always look at your back. Let us recap on what we have been discussing. 2 important things. Number 1, you need to onboard on TIMS or e-TIMS, and that is largely depending on what you want. And in case you have any queries, you can always get in touch with the tax commissioner. Number 2, it is important for you to make sure that your suppliers have also onboarded. They are either going to be on TIMS or e-TIMS, depending on many circumstances. If you do not do that, you are likely going to pay more tax than you should pay. That is all for this session, and remember, we have been looking at how TIMS and e-TIMS are likely to impact on your tax bill. all bills. We have a lot of resources in our website, resources that are going to help you as a business person. So before you leave, make sure that you visit our website and explore what is there that can help you comply with taxes and also grow your business. Remember, it is about growing our businesses so that we can be able to achieve the goals that we have set. In case you want to have a conversation about e-TIMS and TIMS and how the systems are likely to affect your business and your tax bill, you can always contact us, and we have provided the contact details in the description. Till next time, this is Dr. Wakaguyu.